everyone, it is Evan here from the Trade Risk on Tuesday, April 16th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our technicals dashboard here. We can see Tuesday's close, not much going on, really not much going on this week. Yesterday was sort of a slow day. Today was a slow day. We closed basically flat to slightly higher today. 5-day change numbers still in nice positive territory, and we are still above all of the key simple moving averages in all of the major indices. If we scroll down here and look at sector performance, we can see semiconductors, financials, industrials rounding out the top three there. And on the downside, we have healthcare, we have utilities, and we have biotech seeing some underperformance and in fact straight up negative performance over the past week of trading. As far as major markets go, it's still pretty dull here. SPY is leading the charge, up 0.93% on the past 5 days, high yield credit, as well as emerging markets. And on the downside, we have volatility, we have natural gas, and we have gold. So let's jump into the markets here, take a look at what's going on. This is a weekly chart of the S&P 500. We're looking at the cash market, and what we can see is, again, pretty much a dull start to the week. It is only Tuesday, of course, but ranges have been very narrow, and we are slightly negative here on the week, just essentially teetering based on where we closed last week. We still have a MACD that is charging up to new highs here. It's not accelerating at some crazy fast pace, but it is still moving higher here along with price, so that is constructive to see. And we have just continued to cut through all of overhead supply, technical resistance areas here throughout the course of this year. We recently moved above 2872 here, which was the breakdown level back from October of 2018. And again, we've talked about the all-time highs trading right around 2941, seeming like the magnet right now for price. And that's what we really talked about in last week's video as well. It's mostly a recap of last week's video because not a whole lot has changed here. From Friday to today's trading, we're in the same exact spot. So kind of just refreshing on some of the themes that we talked about on Friday's video, on the weekend recap video. All-time highs seem like a bit of a magnet there. 2872 on the downside. That's the bigger level that I'd be paying attention to. We talked about also the VIX and how it was getting to some pretty low levels, some complacency levels, so to speak. It's trading around 12, a little bit of a move higher or off of the lows, I should say. Today was not a move higher, but a move off of the lows from the day today, where it got briefly below 12 for the VIX, closed around 12.33. You know, this here, though, you know, you could look at it as complacency. I won't argue with that term or perception, but when we think about what the VIX actually measures, and we look at some of the ranges that we're seeing, particularly the last just 3 days, the last 5 days even, in the S&P 500, the ranges have really compressed, and that makes sense with a VIX at 12. We are grinding higher here, but you can see just not much movement going on here throughout the day, and the 12-handle VIX sort of corresponds and validates that, you know, kind of price movement that we're seeing. Do we get some mean reversion? Do we get some pop in the VIX and a pullback in the market? We shall see, but it's first going to have to start with, you know, a close below the prior day's lows. That's generally what I look for first, break of a near-term trend line, and then look at some relevant near-term support. So if we look here at the S&P 500 daily chart, basically what we're looking at here is, you know, a first step would be a close below 2895. That was approximately the highs from the first week of April. That's where we sort of had this one-day pullback. We broke above on Friday, and now you can see we're just kind of finding support there. Friday's lows, Monday's lows, today's lows. So if we start to lose 2895, a very, very short-term active level, then, you know, you'd open up the gates to a, you know, another pullback of about 1% down here to this 2872 area, and then we could measure that. So if you're active, if you're nimble, if you're looking at the very short-term levels, that's sort of what I'd be paying attention to. Take a look at yesterday's lows and this 2895 area. That's what I'd be watching. On the upside, though, you know, I'm still looking at all-time highs here to be sort of tagged, or seems, you know, certainly reasonable for this uptrend to kind of get up here and even if it's in a last-ditch effort, a exhaustion kind of acceleration move to highs here, that would be a signal in itself if we could, if the market ends up taking that path. But 29.41, that's what I'd be paying attention to on the upside. If we go to some of the other major markets here, we'll go to IWM next, which you can see here is mostly, moved sideways here too. I mean, you want to talk about compression in range. You're seeing it here in the small caps as well. 4 days gone absolutely nowhere, just a series of overlapping sideways days. We're stuck right around this 157 area. So I'm again watching yesterday's lows, Monday's lows, and then the highs here from 159 and change. That's what's going to need to be taken out for some momentum, for some fresh sort of buyers to emerge here in the IWM. Excuse me. So that's what I'd be watching here for this range. It's real tight, so it's something worth noting here to see if this actually gets some acceleration, some expansion here into the end of the week. Last but not least is the Qs. The Qs here have been just kind of grinding higher here, but again, look at these ranges, very, very compressed, very tight. Some will say it's exhaustion, some will say it's tired looking up here. Whatever you'd like to label it, that's fine. The bottom line is price is continuing to go up. And when we do get some expansion, if it is to the downside, then so be it. We should act accordingly. And in the Qs, I'd be watching about 184, 185, this general cluster of lows here. If we see some sharp expansion in range and some heavy volume, or some volume increase and expansion in range taking out 185 suddenly, then yes, that absolutely would change the character of this market, and we should all take notice of it. For now, that hasn't happened, so you have to be careful. It's that old adage of, be careful shorting a dull market, and this is a dull market right now, and it does look very tempting to short here, in a lot of these markets or a lot of these potential rollovers, but it can be deadly to, be aggressive shorting when the overall trend is still higher and, ranges have simply compressed. So that's really the outlook there. Not much changing at all from last week. It's kind of the same MO. We're seeing the market rotate through sectors. Financials have been the leaders right now. They've been taking up and helping keep this market propped up. We have earnings season that we are in the midst of right now, and that's seemingly what markets are waiting on right now, kind of just getting more of a gauge here on how some of these companies are going to report, and more importantly, how they're going to guide. We've got through financial, some healthcare today. All the big tech all-stars are going to be reporting mostly next week. I think we do have Netflix after the bell here today, and it looks like it's reporting at the time of recording this, and it is at this point at least trading lower by about 5% in the after hours. We're only about 5-6 minutes after the close right now, so I'm sure this number will change here, but if this does sink 5%, open up lower, this of course maybe put some pressure on markets for tomorrow. It's way too early to see, but that's the type of environment we're sort of coming into now, is earnings season and reactions and pricing all of the latest sort of information in. So that's the market. Let's go to some of the other majors here. We'll go to TLT next, which is still having a tough time finding support. It's down on the week minus 0.37%. We talked about the retest of this 123 area. Really wanted to see buyers show up here sooner rather than later. They're certainly taking their sweet time. The more it holds under 123, the more comfortable it trades underneath this the prior highs here, the prior breakout highs, the more sort of pessimistic, or at least neutral, I would become here. The trend overall is still higher, but we certainly don't want to lose too much more ground here. So I think buyers in the short term are in a tough spot. We're going to want to see them emerge again sooner rather than later. If we go to energy next, we'll go to USO, which here on the week is up 0.5%. Still tough to reverse this trend here. It's still grinding higher. It's still kind of working itself up and retracing the big downdraft it saw at the end of 2018. So energy here for USO at least is still holding up, bulls in control, and it's building out a nice new sort of upper level base. If we go to natural gas, you can't say the same here. This is continuing its slide lower, closing at new year-to-date lows for natural gas. Look at the amount of red days here just consecutively over the past month of trading. We've basically seen seen 3 up days and just a tremendous amount of down days here. We're trading near or at all-time lows. Sellers in control here, nothing to like until we see evidence otherwise. Last but not least, if we go to metals here, GLD breaking down, and this is a relevant breakdown because we are getting a move back below 2 year-to-date lows as well for GLD and starting to break below some structure. We talked about this possible complex kind of topping pattern here, whatever you'd like to label it. The bottom line is it looks like there's been some distribution in here. Potentially, if we see the weekly close below 121, that would really kind of give me that confirmation that gold is in a tough spot for the foreseeable future, but certainly the action today is not pretty for it. So GLD buyers got to show up here real quick and save this thing. Otherwise, I'd have to be pessimistic on this so long as we are closing below 121. Now, silver could be the silver lining here. Haha, no pun intended for gold, if it can hold in on this $14 area. This here, notice we did not get the technical breakdown in silver today like we saw in gold. So that's an interesting sort of divergence there. Generally, these metals, you know, they're not a one correlation, but they're generally correlated, and silver is kind of more extreme in the moves onto the downside and onto the upside when times are good. So if we see silver suddenly see a fierce rebound here, that could be interesting and maybe suggests that gold has overstepped its move down here, and maybe this is some type of bear trap. It's too early to say. It's very, you know, close kind of near-term analysis, so we definitely want to wait to see how this closes out the week and plays itself out over the next couple of days, but it's something to think about. So that's it. That's what I have. Not much new to say about it. Let's pay attention to those earnings reports. Netflix here, okay, you can see is up a little bit more from where we just last looked, still down 3.5%, but pay attention to earnings season. Let's see how some of these tight ranges resolve itself. IWM in particular, 4 days real tight and sideways here. That's what I'd be watching closely into the end of the week. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk, thetradeRisk.com/blog. Have a good rest of the day, and we'll talk to you in the next video update.